and especially through the lens of technology. So, for example, a lot of economic history books or monetary history books focus on history in the traditional sense, things like human decisions, things like geopolitical decisions. What did this political leader do that resulted in this outcome and then impacted this other country in this way, for example? Whereas I focus a lot on kind of the engineering question of how did new technologies shape what we use as money and how we interface with it directly. And so it goes over, analog monetary technologies, from coinage to paper to printing press to all, analog encryption techniques to prevent forgeries, that kind of stuff. But then, of course, it jumps into the digital age with the invention of the telegraph. And the invention of just various ways to kind of move ownership of money around. And the general theme, if I had to summarize it, is that the past 200 years or so, even more in many contexts, almost every monetary friction has been solved by centralization. So, for example, gold is bulky to move around. It's hard to verify that it's gold down to its core. It's basically an expensive and slow proposition to move around and settle gold. So, a lot of the monetary technologies for centuries have been around how do we move claims for gold faster than gold itself? And the answer to almost every time was, well, we centralize it. We put it in a third party, and then we just trade, ledger entries with that third party. And then maybe when that third party has a problem, we get an even bigger third party or faster speed than the weaker money. So, for example, over the past century, the biggest comparison was, say, gold and the dollar, whereas gold obviously held its value a lot better than the dollar, but the dollar had various advantages of speed and convenience. And so, even though the dollar was weaker, it was still stable enough that, especially when you combine, legal monopolies and legal tender laws, things like that, that the dollar was able to win out. One thing that's interesting about Bitcoin is that it's over the long term, it grows even less than gold in terms of new supply. So it's even scarcer than gold, and it can move around as fast or faster than fiat currencies can. And so that's a really compelling long-term story to get people to gravitate towards it and change some of the structure. Although, in my view, that's a multi-decade story. That's not like a, 1 decade or a 2 decade story. It takes very long time to change these gigantic structures. And one thing that's notable about the Bretton Woods era is that, a lot of focus is on that 1971 decision to leave it. But what the evidence shows is that it was breaking basically throughout the 60s. The Bretton Woods system, it was decided upon in 1944, it was implemented in 1946, but then it wasn't really even fully implemented until the late 1950s. That's when they undid some of the kind of the post-war era controls that were in place, and that's when they actually started that overall process. And from that point, the amount of near-term money in, and you're buying scarcer assets, and you're doing very good, especially because you have global arbitrage. You can short one currency and buy assets somewhere else, for example. Whereas if you're on the other side of the spectrum and you don't have a lot of access to credit and you're just kind of earning wages, you're saving a little bit, you're getting constantly devalued. You're getting paid in melting ice cubes. And so that's kind of the divergence we've seen over the past several decades, which is that it's very kind of challenging. And in the United States, we've had it still pretty good. For example, I spend part of each year in Egypt, and they have 20% annual money supply growth. And so you can imagine everything is dialed up. Everything is, the prices are on average going up a lot quicker. Even banking access is lower. So fewer people have access to banks to even earn interest to partially offset the devaluation that's occurring. So if you're on the bottom of the income spectrum there, you're literally dealing with cash. You're getting paid in cash. Whatever small savings you have are in cash, and that's literally inflating away at 20% a year on average, year after year after year after year. While if you're fairly wealthy, you might be shorting the currency. You might be, buying real estate with a multi-year loan at pretty low interest rates, or you might be doing some sort of arbitrage, for example, where you're actually benefiting from that devaluation of that currency. And that's happening in 160 different currencies around the world to different speeds and different levels and from military, basically, foreign adventurism.
All right, so this is my last question before we take questions from our audience. People are always welcome to leave us voicemails, or they can send an email. We have several questions today. But my last question, and I get this all the time from people that listen to Speak Up, or I run into them at public presentations that I'm making, and they ask me the following question. They say, "Well, given the dramatic backdrop that you've just described in terms of this deficit spiral that the United States is facing, yet people are day to day working in the economy, people day to day are innovating in the economy. what happens? What eventually happens? Is there a restructuring of the United States? Does the United States have to remonetize itself, reset its currency? Do we have to print a $34 trillion coin as an example, pay off the debt? What do you think eventually happens, or is it a gradual slouch downward to further and further demonetization?
So I think there's two main outcomes. If there's enough technological development, so in other words, enough
But if you're a 20-year-old, 30, 40, or 50-year-old, it's more or less the same game plan, isn't it? It's to try to short the fiat currency and try to get into financial assets, real estate, stocks, and bonds, maybe faster growing stocks that are going to help you outpace the rate of inflation. Isn't that really the right call?
yeah, I would try to own whatever's scarce because in either scenario, you should benefit in the long term. So things like Bitcoin, equities, cash flow producing businesses, ways to earn a good income, high quality real estate that's not in bubble valuations. For example, you buy those things, and to the extent that you use leverage, you use it cautiously and particularly in periods of lower rates to make sure. Again, it's unfortunately like a game of blackjack, where
Hmm.
generally if you're not using any debt, you're kind of the people other people are dunking on, right? You're the one that's kind of not
Right.
benefiting from the situation. But of course, if you overuse leverage, then you're one of the ones
Right.
that
And you get wiped out.
you get
Right.
wiped out.
Exactly. So it's a judicious use of leverage. It could be
Dollars, like under his mattress, as part of his savings because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency. So it kind of comes down to, he's got a little bit of real estate, but that's illiquid. And so it comes down to dollars, gold, and assets like Bitcoin and things like that. And so another complicating factor is that, let's say, for example, if I send money to a graphic designer in country XYZ, maybe it's Egypt, maybe it's Nigeria, maybe it's Argentina, they often will receive it in their local currency at a fake exchange rate, and they still have the problem of, what do I keep my savings in, or how do I make sure I raise my prices each year in line with the monetary debasement that's happening. And one of the cool things about Bitcoin, or stable coins for that matter, is that I can send them the money that they prefer around their local banking system, as long as it's not a sanctioned country for me, right? So, for example, I would not send money to an Iranian, even though I would have the technical capability. The status quo continues. And then the longer term question of, are there nonlinear events from this? For example, if we fast forward, a year or 2 years, there's questions like, is Iranian oil still getting to the market or not, right? For one reason or another. Or is the Red Sea still open or closed? There's things that can kind of spiral negatively should certain things escalate. And so those are the main things: is, does it disrupt energy? Does it disrupt shipping more than it already has? But I think the biggest outlier question is, what happens? Does it affect energy in any sort of really meaningful way?
It's great. It's a great answer, Lynn. We got one more question. The tech CEOs, they testified this week. Do you see any meaningful change coming to those platforms in an election year? This is from Dave, and he's from Oklahoma.
So I think that anything that's meaningful enough that has to go through Congress and the president is unlikely to happen this year. Like anything that would really, really materially affect them because of how polarized our political environment is. There are some actions that can be done only with the executive branch, for example, but those are generally more restrained in terms of what they can do. And so